Hi everyone, it's Jack back with another video. Today I'm going to be doing a video on Alibaba, a stock I've covered a few times on this channel. Today this stock's been a roller coaster, it's a bit of an understatement. 52-week high of $182, that is still significantly down from its all-time highs of roughly double that. It's now just $61, down 50% in 2022 alone, down 15% just today. It's come down a bit as towards the market end, but down 15% today as the wider tech index in China is getting absolutely battered from changes in government, which we're going to talk about in a minute. Stock is currently $162 billion market cap. It's trading at a trailing PE of around 30. On a forward basis, much more attractive. I want to talk about this company because I think this is definitely a fantastic business. More now a question of, is it a bad stock? Is it a business that should be avoided? I'm not so sure I'm fully sold on that yet, but let's talk about it. The main reason for this decline is a 10% decline in the last 5 days of the Hang Seng Index, which is kind of like China's Nasdaq. 6% just today, which is absolutely staggering when you compare that to the movements in the S&P 500 and the Nasdaq. You know, a 3 or 4% day is like a historically bad day for the Nasdaq S&P. 6% is crazy. It's the type of thing we don't see unless it's a serious crisis, you know, around COVID or Black Monday or something like that. Majority of the reason these are down is because Xi Jinping in China has consolidated his power. He's confirmed to a historic third term, which never happened before. World's second largest economy. It's a massive deal that a seemingly unfriendly regime to Alibaba, to Tencent, to many of these tech companies in China that are also US listed, is maintaining power and even consolidating. So certainly worrying for Alibaba shareholders, myself included. This is previously a much different scenario to when China was making broad moves against Alibaba and companies like that, the delisting talk. But the delisting things were never really going to happen, whereas this is much more serious. This is a consolidation of power to make a much more serious threat to Alibaba's business, in my opinion. These risks are definitely worth thinking about and considering. There is a non-zero chance that this business could be delisted, and an unfriendly government, or one that appears unfriendly towards Chinese tech giants, is definitely going to make Alibaba's life harder from owning and operating. If you remember the IPO of Ant Group that was cancelled, which would have been a spin-off from Alibaba. With that being said, they are just risks. None of these are set in stone, and these are things we have to weigh against the valuation of this business. Now looking at the 3 months ending June 30th, which is the most recent reporting period we have for Alibaba, let's look at its performance. The China commerce segment did struggle. Nearly 142 billion renminbi, which is about 7 to 1 with the dollar, 6 to 1 with the dollar right now. That's down 1% year over year, and this is a very large percentage of this business. 69% of the total revenues from China commerce. It underperformed 1% year over year. Of course, this is in the wake of supply chain challenges, in the wake of local lockdowns in many of the major cities in China. So it's kind of to be expected, and still roughly maintaining revenues. I'm not going to ding them too much, but this is definitely not strong performance from that perspective. International commerce, which is a much smaller segment of the business, just 7%, was only up 2% year over year, which again is not very impressive. One thing that I like to home in on when I'm looking at Alibaba's reports is the cloud segment, because this is, in comparison with the retail business and the international commerce business that are going to be relatively low operating margin businesses, the cloud segment has the potential to be a very high margin business, much like AWS or Microsoft Azure, and that grew 10% year over year, which is again reduced from what it previously would be. But overall, it was pretty much flat year over year in a very tough operating environment, and this is already a business which was significantly undervalued at this point, so I'm not going to ding it too much, but it's certainly not performing at the best level it could be. Taking a look at the balance sheet to see if the balance sheet is in any stress whatsoever, it actually looks decent. They have around a cash debt of 3.05. The debt that they do have is relatively low interest. That interest coverage is a little skewed because their EBIT is reduced significantly this year because of supply chain challenges and things like that. The free cash flow margins were down quite a bit. Debt to equity of 0.16, equity to assets of 0.56, debt to EBITDA of 1.17 are all pretty good metrics for this industry and about the middle of Alibaba's long-term range. An Altman score of 2.57 indicates this company is kind of in the grey area, but not quite in financial distress or at risk of being in financial distress. I think that is actually a little harsh. This is a business that produces a decent amount of free cash flow, has low debt compared to its cash, so clearly has high net cash, and is relatively safe from financial distress in the near future, in my opinion. Next, I want to look at Alibaba's margin profile and its valuation. Gross margin, operating margin, and net margin are all quite depressed recently. The gross margin of 36% is very low for Alibaba's history, and operating margin of 10.4% is extremely low for Alibaba's historical metrics. This is basically because of supply chain challenges, which are temporary in nature as it appears, inflation, and local lockdowns are all providing a bit of a squeeze on Alibaba's economies of scale and therefore its margins. Return equity, return assets, return invested capital, again, are all reasonably depressed because of the problems the stock has been having recently, but long term this business has been very successful on these metrics. I have no doubt that it will return to this in the not too distant future. From a valuation point of view, this is a company that's traditionally valued probably at a PE around 20, which is normally fair. On a trailing basis, the PE is 34 because it's been struggling earnings-wise this year. But on a forward basis, is expected to have a PE around 8, which is positively cheap, under the S&P 500 average by quite some way for a company that generally is not average. It has extreme optionality, is very diversified, and it is traditionally grows its revenue. I think over the last 3 years, it's grew revenue on average 30%. That is very, very strong. Price free cash flow of 7.5 is positively bargain. I consider under 20 to be roughly fair value, under 15 to be cheap, and under 10 to be bargain. So price free cash flow of 7.5 is extremely cheap and very cheap for Alibaba's historical valuation. Finally, to do a discounted cash flow analysis to work out an intrinsic valuation and therefore fair value for this business based on the sum of its future cash flows. So in the last 10 years, Alibaba has increased its free cash flow at a compound annual growth rate of nearly 31%, which is absolutely outstanding. Can't take anything away from it there. Last 5 years, 11.2%, which at this valuation is outstanding. But in the last year, it was down 31%, which is definitely enough to be sniffed at. That is a very big decline. On a trailing 12-month basis, it's $8.17, which is what I'm using for this calculation. I use a discount of 9% for the long-term return to the stock market. I believe that over the next 10 years, a relatively conservative value for this business is a 5% free cash flow growth rate. Yes, they are struggling right now, but I think they will return 8 to 10% over the long term. I think when averaged across the next 10 years, if they struggle for a couple of years now with supply chain and inflation and whatever, then 5% will average across the next 10 years. And it's a reasonable estimate. It's grew its revenue over the last 5 years at 40%. If this could just track even gently with that, then this could be a really, really big return stock. For a valuation of $110 with these metrics versus the present day stock price of $61.42, that's a huge margin of safety of 44.5%. Even going even more conservative, if you put in 0% growth stage, so you're expecting 0% free cash flow growth over the next 10 years, that still gives a fair valuation of $79 at this discount rate, still significantly above today's stock price. It's pretty much at this price, we are predicting negative growth of around negative 3% over the next 10 years, which is absolutely staggering and shows that this stock has clearly a lot of concerns priced in with it. And that is the real concern with Alibaba. A few months ago, when it was only delisting concerns, I was not so bothered about investing in this business, and I thought the margin of safety provided by its valuation was fair enough. Now, with Chinese government concerns, I definitely think the waters are murkier, but in addition, its valuation has come down even more, and this can be no doubt it is a quality business trading at a very cheap price. The question now is this just a great business but a bad stock? And while I'm not totally convinced of that yet, I'm starting to believe it. It's my cost base is around $80, so I'm down 20 or so percent. I'm not overly concerned about that, and I'm willing to add a little bit more. It's only a reasonably small position, around 2% of my portfolio. However, this is definitely concerning, and while I believe the margin of safety is more than enough to de-risk this relatively, there is still significant external risk to this business, and generally with any business, I don't like risk that they can't control, so I'm not going to be adding a ton to this. I'm going to keep my position relatively low, and I believe that is the best course of action for me. Of course, you should let me know what you want to do in the comments, because there are significant risks and I want to hear what you think about those significant risks. However, this is still a quality business in my opinion that has a lot of growth ahead of it, whether that be just a business and the stock doesn't track, I don't know. Let me know what you think in the comments down below. Let me know what you think of Alibaba. Let me know what you think of the change in the Chinese policy. Let me know whatever you think down below. Like and subscribe and enjoy the video. I'll see you again next time.